Good day. Today I want us to focus on the ordinary share capital. I want us to focus on the ordinary share capital. So we are told to prepare the following accounts, but I just want us to do the ordinary share capital. Okay, so let me open this account. The ordinary share capital. So now what are they saying up there? So they gave us the balances. They said information balances on 1 January 2020. Right? So, and they told us that the financial year ends on 31 December each year, meaning that these balances are the balances at the beginning of the year. So let's quickly go and write the balances of the ordinary share capital, which is 1,150,000. So we know that the ordinary share capital is an owner's equity, meaning that its opening balance, it must be on the credit side. So it's 1 January 2020. The balance breakdown of 1,050,000. Right? Let's continue. So, transaction fee, because this point is talking about the retained income, but we're just only focusing on the ordinary share capital. Transaction fee for 2020. January 2020. On 5 January, the company invited the public to purchase 400 ordinary shares. Note this, they're not saying that the company has issued the shares. They are saying they've invited the public to buy the shares, which are 400,000. They have not yet issued the shares. Then, now, they've been issued. On 31 January 2020, the money for shares at rand per share was received and deposited. So now the company has sold the shares. So when the company has sold the shares, which is an ordinary shares, so it means that the ordinary share capital has to increase. And it's an owner's equity, so it must increase on the credit side. So it's 31 January 2020, right? So it's a bank. So because we sold the shares, so the general here is going to be CRJ. So it's how much? 400,000. So each says it is selling for rand. So that is going to give you 1,200,000. Right? Let's continue. What else did they say? On June 2020, provisional income tax of 30,000. So here, they're not talking about the ordinary shares. So let's skip this part. Then on September 2020, the company repurchased 50,000 from these shareholders at rand 60 per share. Right? So when the company is repurchasing the shares, so it means that the business there is making a payment, right? So when they are repurchasing the shares, so it means that now the shares that have been issued before, they're now coming back. So it means that now the ordinary share capital is going to decrease, right? So this happened on 30 September 2020, right? So we are making a payment because we are buying back the shares. So it's bank CPG, right? These shares, they are for how much? 50,000. And they said, so we bought them back for Rand 60 per share. But we are not going to take this amount and go and multiply it by the 50,000 under the ordinary share capital. So here's what we do. When we are repurchasing the shares back, what we do is under ordinary share capital, we use the average price of the ordinary share capital. So to get the average price, we must say ordinary share capital at the beginning of the year. So which is how much? 1,050,000. And then we say plus the ordinary share capital issued during the year. So the ordinary share capital that was issued during the year, it is how much? 1,200,000, right? So we come and add them together. Now, I want you to note this. If the shares bought during the year, they are after the repurchasing of shares, it means that we're just going to take the average as 1 million divided by 500,000 shares. If this happened after the repurchase of shares, but then this 1,200,000, it happened before the repurchasing of shares. So I'm just going to add them together. It's going to be 2,250,000. Right? So 2,250,000. And then we add these shares together, 500,000 plus 400,000. So which is going to be 900,000. So we're going to take this amount and divide it by 900,000. So which is going to be 250. So this is the average price. This is the average price. This we're going to take and come and multiply it by here. 250, which is going to be 125,000. Now let me clarify this again. I said that if the shares that were issued during the year, so which they were for how much? 400,000, and then we multiply them by Rand, they gave us 1,200,000. I said if these shares were issued during the year, but they were issued after the repurchasing of shares, meaning that after the date of the repurchasing of shares. Let's say, for example, they were issued during November. It was going to mean that when we were looking for the average price, we were not going to add this 1,200,000. We are also not going to add this 400,000 because they will have happened after the purchase of shares. So it means we're just going to take 1,050,000 divided by 400,000. Then we're going to get the average price. So which we are going to use it in the ordinary share. Okay? So this is how we do it. So then now we just have to identify that which side is big. Obviously, we can see that the credit side is a bigger side. So it is a bigger side. So it is how much? 2,250,000. So 2,250,000. Right? So the difference between the two, it is how much? 2,125,000. So we are going to regard this as the balance credit down, meaning that is a closing balance. The balance credit down at the end of the year on 3rd December 2020. So at the end of the year. Then we have to transfer this balance to the opposite side at the beginning of the following month. The following month after December 2020 is going to be 1 January 2021 as a balance brought down of 2,125,000.